We've all seen the recent headlines about the housing market across Canada, but what's really happening here in Calgary? Let's find out as we dig into the numbers for January 2023. All right, welcome to our new monthly video series. We're going to dig into market reports every month. This one is for January 2023, and I would say if there's a theme, it's that inventory for lower priced homes remained low in January. In fact, the number of new listings fell to the lowest levels we've seen since the late 90s. This was especially true for those lower priced properties. Sales activity slowed compared to some of the high levels that were reported last year, especially early in the year. And notably, there was a shift in the composition of sales. Detached homes made up only 47% of all sales in January. No surprise that higher lending rates are causing many buyers to look for these lower priced products. However, these same high rates are preventing some people from selling their current home and moving up to something more expensive. So, of course, this is impacting the number of new listings we are seeing for these lower priced homes. In January, there were only 2,451 properties on the market, which is about 43% lower than long-term trends for that month. Significant variation of inventory was seen by price range as well. Homes priced under $500,000 saw declines of nearly 30% year over year, while inventory improved for homes above that price range. Although overall conditions are not as tight as they were last year at this time, the lack of new listings is preventing a shift towards a balanced market. We even saw prices climb up slightly over December, breaking the slide that we'd been seeing for several months prior. The benchmark price reached $520,900, which is 5% higher than last January, but still below the highs we saw in May. Prices experienced strongest increases in the northeast, east, and southeast areas of the city, with overall benchmark prices seeing an increase of 10% year over year. So let's dig into the various segments here. With detached homes specifically, home sales experienced the largest pullback despite the rise in inventory levels year over year. High interest rates mean there's less demand for higher priced homes, which is supporting inventory gains there. Meanwhile, limited inventory of the lower priced homes are preventing stronger sales in these lower price ranges. Prices for detached homes have trended down in the higher priced inner city, while there have been some price gains in other areas of the city. Overall, the benchmark price for detached homes reached $622,800, which is slightly higher than December, but still below the monthly high achieved last May. Now, what about semi-detached homes? Well, similar story here. Sales in this segment slowed compared to last year, but still remain above pre-pandemic levels. The pullback in new listings has left inventory below the already low levels reported a year ago. Similar to detached homes, semi-detached have seen shifts where the demand remains strong for lower-priced options. Most areas of the city reported a price growth, except in the inner city, which caused benchmark prices to ease slightly over levels that we saw in December. Despite this, prices remain almost 6% higher than last January. And what about row townhomes? What's happening in this market? Well, as with other segments, sales slowed over last year's record high, and actually would have likely been stronger if there had been more listings in the market, as the demand is there for these townhomes. New listings dropped over last year and were more than 20% below long-term trends, and the months of supply remain under 2 months. These tight conditions also prevented any downward pressure on prices, so we actually gained nearly 1% in prices over last year. With a benchmark price of $361,400, we are sitting more than 12% higher than last January and only slightly lower from the high that we reached last June. And lastly, let's talk about apartment condos. What's happening there? It's the bright spot, actually. Sales in this segment did not experience the same pace of decline as other property types, probably due to the number of new listings coming in. Nonetheless, inventory levels remain low and have not been this low in January since 2014. This is only with a month of supply, which is lower than what we saw at the start of last year. The shift to more affordable options is also impacting prices. So here, prices trended up from last month, driven by strong gains in lower priced areas in the Northeast. Overall prices in the city reached $277,600, which is again 1% higher than December and nearly 10% higher year over year. Great news for condos as the spread from record high prices set in 2014 continues to narrow. I hope all this information was super helpful to you as you get to know the Calgary market. We really are experiencing different trends here in this city than other parts of Canada, and I hope that you tune in next month as we explore what's happening in February. Thanks again.